So for those that are unfamiliar with who you are, Chris, would you mind just sharing a little bit about yourself?
Sure thing. As you mentioned, I'm the founder and CEO of a company called Kickstart. I graduated from Boston College, and my first job out of school was at a management consulting firm called LEK Consulting, where I got my hands dirty and learned everything you could ever want to know and not want to know about private equity due diligence. We serviced many major clients who were looking to acquire private companies by doing a lot of their market intelligence, doing financial models, talking to management teams, so on and so forth. And that's where I really became experienced with learning about the traditional private equity industry. And I kind of had this big aha moment one day while I was at work where I realized, wait a second, I'm spending hundreds of hours diligencing private companies for private equity firms, and yet I have no way of investing. Why is that? And little did I know that it would lead to the next, 7, 8 years of my life thus far, where I basically Googled, why can't I invest in the private markets, and learned about some of the traditional rules that had kind of barred non-accredited investors, AKA 97% of America, from investing in anything outside of the traditional public markets. And got really, really excited at that notion. Ended up starting a fintech blog about it as a side hustle. Went in and kind of cut my teeth working at a real startup that had raised 8 million in seed funding. It was a travel tech startup, helped them raise their Series A, and then ultimately had my blog acquired by one of the founders of Napster from way back in the day, and now is really the beginning of creating what Kickstart is today, which is essentially trying to take this new ecosystem that allows anyone to invest into high growth companies, as you mentioned, private companies, private real estate, private anything you could think of, and is making it accessible to the masses. Been at it for 4.5 years, and certainly I'm having a time in my life, if not the hardest time in my life as well.
What about like you investing? Like, what were your thoughts or what was your relationship with investing at that time? Like, did it not even cross your mind? You were just like really excited about extending your network, meeting these founders, learning about private markets, or, perhaps maybe you invest a little bit while you're in college, or maybe live with your parents' money for fun.
I started investing probably in my freshman year of college,
Oh,
in
wow.
in public stocks. Growing up, I always had this inkling and desire to want to invest, and I can't tell you why. I remember watching CNBC when I was young, and then one day going to lunch with my mom at Panera Bread. And I came home, and it was the first time I'd ever been to a Panera. It was the first one in our community. And I thought,
Mm.
my gosh, this is a step change from McDonald's, right? Like the quality of food, all of those things. For that time, it was really impressive. And I told my mom, I just found it on Yahoo Finance. I think you should invest in Panera Bread. Like, this is the future of food. Had they listened, they would have made a good deal of money on that investment, because Panera Bread ended up doing quite well over the next decade from when I had said that. But I always had this desire or interest in investing. And so, yeah, I started in college. And then as soon as I learned about this new industry where you can invest in private companies, I was right on it and started investing in companies. Any disposable income I had always ended up going into investments. And I probably have about 30 or 40 startups in my investment portfolio now. I have tens of real estate properties where I'm owning fractional shares within each one of those. I have probably 20 or 30 collectibles I'm invested in on fractional share platforms. So I've become very invested in all of these different alternative assets.
How was your experience hiring? It seems like a bulk of your hires took place post 2020, which is a super competitive, volatile market, especially when it comes to competing for talent. So how was it with you guys in terms of getting the word out, or how did you feel like you were just doing in general in terms of getting responses from folks? And I mean, you obviously did a great job in being able to hire 20 plus people in that time. And so that's hats off to you and the team, and very, very impressive. But we'd love to kind of hear your experience.
I think the most important thing you can do as a founder is to just hire people more exceptional than you. And then your job is relatively easy, right? It's still hard, but it's much easier. And so for me, the people thing is the most important thing that I could be a part of, and make sure is a success. Fortunately for us, a lot of our hires and our best hires have all come through referral of other people on our team. And so it's
Mm.
really been kind of this natural evolution where every year, we're adding between like 4 and 10 new people onto the team. And so by not needing massive numbers, we've been able to kind of curate the best folks from within our own network. And that's really led to a lot of just exceptional hires. And because we've hired a little bit all over the country, we have people tied into, Tulane in New Orleans. We have people tied into Wellesley in Boston. We have people tied into, the schools in the Bay Area. And so we've gotten this nice diversification of places that we're pulling from. And so we're able to get all of these kind of different talent sets. And honestly, it's happened really naturally. And I think
Mhm.
that's what's been so key to us having such a powerful team that works so well together.
Gotcha. And so moving forward, is it safe to say that you're going to continue this flexible hybrid approach when it comes to scaling out your
Absolutely.
team? It seems like
Yeah, I
it's going
think
very well.
we fully leaned into being a distributed team. Ultimately, I don't care what anyone says. If your team works extremely well distributed and was able to build a really successful company while in COVID, there's certainly no reason why they can't continue to do that. One of the biggest things we hear from people is that they love having the flexibility and ability to work from wherever they are. And you know what? Some of the most talented people I've ever met really don't want to be in the office. And some of the least talented people I've met want to be in an office every day, and vice versa too. But ultimately, if you find the right people, the talented right people that you need, they will thrive wherever you put them, as long as they know upfront, expectation wise, what to expect. And so we've had great success with it, and I plan on leaning into that in the coming years.
Fast forward to today, Chris, would you be able to share just one more time, like what does your company do for the layman terms, or put in a simple way?
Yeah, very simply, about 6 years ago, there were some regulatory changes and technology advancements that basically allow anyone to become a venture capitalist and an alternative investor. And
Mhm.
all I mean by alternative investor is you can now invest in fractional shares of big real estate projects, right? So take $100 million real estate, maybe a major building in a city, you could split that into 100 million parts, and each person could buy $1, share of that building. So nearly every private market asset is now being fractionalized and securitized. And there are thousands of companies each year now raising capital from the general public, where you yourself can own a piece of equity in an early stage startup that's on the up and up. And so what we do is we sit at the center of that universe. We track the billions of dollars and the thousands of deals occurring each year across these asset classes. And we provide a one-stop shop for search, due diligence, and management of your alternative investment portfolio. If you've ever used Morningstar or Bloomberg or any of those tools for public equities investing, we're doing the exact same thing, except we're applying it to this new world of alternative investment opportunities.
Can people also invest into these companies through Kingscrowd?
Yep. When you come to the Kingscrowd platform, you'll get all of your search and research needs. And then there's going to be a button that says invest in whatever, and that will take you to the marketplace where you actually enable the transaction. Our whole thing is that we don't enable transactions, and that allows us to be completely independent and unbiased in our analyses and our research on all of these companies, so that you have a due diligence partner who's working alongside you, rather than maybe having, other interests in making sure a company does well or what have you.
So for your company, what's the demand like in terms of, or the demand or volume or activity in terms of people investing into the private markets starting at 2020 to present day? Because we're talking right now in 2022 going to Q4, where there's a lot of uncertainty out there, and a lot of that can have a trickle down effect with just overall sentiment when it comes to investing. And so I would love to kind of hear your thoughts, perspective on that.
We've actually had dramatic growth of this market, and obviously COVID was really terrible for so many reasons. But, I think when you have these extreme events, they tend to impact change, right? Or change in behavior. And so what we saw going into COVID was we had this really nice growth of our market, but there was always that pushback from traditional angel groups, right? Oh, I need to meet the founder in person. I need to write the actual check, the physical check. And I'm not even kidding. These were some of the things that I was hearing from people. I'm not going to invest in you because you want me to do it online, and I only write checks. I kid you not, that happened many times. And all of a sudden, 2020 happens and we have COVID and people are stuck at home. And literally, it was kind of unbelievable to watch. We had this down month when COVID started, and then it just like 3 or 4x almost overnight the amount of volume we were seeing in terms of dollars invested into deals online. And then we saw the amount of volume of deal flow grow dramatically. Why? Because founders are smart. The VC said, we're shutting off for now. And they said, I still need capital. Okay, here's a new capital market. I'm going to go over there. And so the deal flow numbers, grew dramatically. And so through COVID, our industry doubled and tripled. I mean, it was unbelievable growth that we saw. Now, kind of going into this recession, we've certainly seen a little bit of a slowdown, but basically the slowdown is that we're not seeing the extreme growth we saw. We're seeing kind of a flattening curve. And I think the reason why we're going to continue to see that in the coming months is because the market penetration of our industry is still so young and so low that we have enough new entrants coming in that even as folks are falling out because of worries about a recession or living through this recession at the moment, there's enough new folks still coming in who are doing okay right now that are deciding to invest for the first time into these deals. So we really haven't seen a dollar drop off. And in fact, we've begun to see, again, a new bump in the amount of deal flow coming into this market. And to just give you a really quick sense, when I started this company about 4.5 years ago, if we saw 3 to 4 new companies a week trying to raise capital on platforms like Republic and WeFunder, that was a lot. Now we're seeing upwards of 60 to 70 new companies a week. I mean, it's dramatic.
Oh my goodness. Wow, I had no idea you saw companies coming in at that level. I mean, personally, that's just very, very surprising. But again, I appreciate the added insight. I mean, I think it's very easy to be consumed by the fear and uncertainty, but it's also helpful to kind of take a step back and understand that some of the biggest companies that we know today, especially in tech space, have been created during market conditions, right? And whether or not things get really, really quote unquote bad or things continue where they are, there will always be companies out there getting funded and created, right? And so it's not all doom and gloom. And I want to thank you for validating that.
Absolutely. I think one of the worst things that you can do is to act too knee jerk in markets like this.
Mhm.
You have to take a long-term view, right? Didn't you get into this business as a startup founder to build for 8 to 10 years? If not, maybe you should be having a self-reflection regardless of the situation. But I'm building for the long term. Yeah, we might have to slow our burn, we might have to slow hiring, but to just go from extreme growth to extreme slashing of costs, that's not going to do anything good for your business long term. You have to think about it with a sustainable growth lines going forward. And for me, throughout this entire building of this company, we have taken a low and slow approach of adding pieces when we can, holding back on hiring certain pieces when we couldn't, and just being as thoughtful and methodical as we can be to make sure that we see the long-term vision play out.
Would you now find yourself in the same shoes, giving the same advice to other people who want to become founders? Like at the end of the day, it's all about action, execution, and you just got to do it. Do you agree?
You have to do it, and the reality is life only gets more complicated as you age, and what happens is, and I saw it with a lot of my colleagues in consulting, is you start to get used to the salary that you have and you build
Mhm.
your life around that salary and you start to buy more things and you get the house or whatever. And now suddenly you're in a position where you're like, well, I need to be paid $200,000 to $300,000 a year in order to be able to live comfortably. It's like, well, good luck spending, a year or two not making any money as a founder, and then maybe making a pittance pay for a while as well. So being able to take the level of risk that it involves to become a founder, the
Mhm.
younger you can do it, I say the better.
How much are they making an effort in things like the analytics of the world or analysis? Like, how would you consider them to be substantial competitors in that space, or is the value that you're bringing completely novel that investors are like, wow, it just makes sense. It's a game changer, and I should just go to King's Crowd.
Yep. So the value we bring is completely novel to your point. So the Republic We funders know they don't do anything around that. And not because they're not trying to do a good job, but because it's literally their legal requirement to create an open marketplace where investors can decide to invest in private companies. The only thing the platforms are there to do is really to make sure those companies are being compliant with their paperwork and their legal
Mhm.
matters. Other than that, they can't be a market maker. They can't help you decide to invest in one company or the other. So they absolutely love us and love to collaborate with us. And by collaborate, all I mean is open lines of communication with us. If we want to talk to a founder for diligence purposes, if we want to, host a webinar with them, whatever it may be, they're happy to work with us and even provide APIs to us because they want us to exist. They need us to be successful in order to help grow this industry. You need that third party diligence so that people have a trusted source to go to and say, okay, this is how I become an informed investor and make good decisions when I go to these various marketplaces.
Does King's Crowd also invest?
So one of the biggest asks we had over the first 4 years of our company that we were not set up to do was to
Mhm.
provide one-click diversification. They say, I completely trust your ratings. We have quantified and rated every company for the past 4.5 years. So we have about 5,000 companies in our database that we have quantitatively rated utilizing our own quantitative rating algorithm. And we've started to see some pretty interesting performance metrics from those quant ratings. And so people asked us, could you provide a one-click diversified portfolio of your highly rated companies? And so we've created a semi-programmatic fund. We haven't begun launching or investing in companies just yet, but we've raised over $1.5 million for our first fund product over the first few months, and it is something that we're looking to deploy very soon.
Was the whole idea of having a flexible workforce something that you thought of from the beginning, or was it is merely the result of the 2020 and whatever happened afterwards?
You know, it certainly was a result of 2020 that played a major role, but I think something early on happened, which is I realized not all of the people that I wanted to work with lived in the city I was in.
Mm.
And I quickly became relatively comfortable with this idea of working apart, and if there's someone extremely talented and smart up in Oregon that I want to work with, why should I not work with that individual? As long as they're capable and competent and get the job done, I don't care where they live. And so, for us, we get to collect the very best talent across the entire country and work with those folks regardless of where they live. And I think it's really, really cool.